Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 49, this Road to 100k Realized Return Challenge. And we started the week exactly as we expected, because as the markets continue to rise at this point. I'm going to show you here the QQQ that it continues to rise. It just breached the $550 mark here, and basically it continues to renew all-time highs, which reinforces our perspective that probably it may not be worthwhile. And you can see here the gap at which it opened trading today, and probably it's best to shift our focus to some other place, because otherwise we have to post even more cash as a collateral to sell the puts, and the possibility of a pullback increases as the stock keeps going higher and higher. And so because of that, we decided to shift gears, and we sold 8 puts on the IWM here, as you can see. Strike price 214, and as I was showing you, the stock basically behaved in a very similar way as the QQQ. As you can see here, also open with a large gap. It's stabilized and is now hovering around 216. The trade that we input, so the puts that we sold at 240 with a 214 strike price, had a probability of profit. I added this column here to our scorecard. The probability of profit around 89%. So this is basically a delta 11 put option. All right. So basically, there's no difference between this one and a delta 10 put. So we'll see. We still collected 16 cents in premium, and of course, given that there are 8 contracts, we received 8 times that plus 100 times 100, which gives us $128. So we'll see. This is a 0 DTE option, so at the end of the day this will expire, and if the opportunity presents itself, we will probably either try to sell some puts at the dying seconds of the session, or simply let it expire worthless if no other opportunities arise. When it comes to Pfizer, as you can see here, we went ahead and sold 30 contracts with these shares as collateral. 30 contracts, call contracts with a strike price of 25. Now you may find that this is a relatively low strike price compared to what we have already been doing before, but as you can see here in the option chain for Pfizer, basically we had no other alternative, because the option chain for the 1 week is extremely shallow. All right, and we had to settle either for 24.50 or 25, or we had to settle for a 2-week option with a strike price of 25. Now keep in mind, at this point I would normally sell the 25.50 or the 26. However, I did some calculations here on how much premium we had already received from these puts, from the calls that we sold using these shares as collateral, and doing the weighted average cost by multiplying these prices by the number of shares that it represents. It gave us, in a rough approximation, around 24.70, 24.80, something like that. And because of that, that means that if we account for all the premiums that we receive up to this point with these shares, meaning only from the covered calls, we could break even. Of course, capital loss, but the premiums make up for the difference. at around 24.70, 24.80. So if we manage to exercise, to get these calls exercised at 25, that means that we will still make a slight profit overall, even though we have a capital loss. So the premiums more than make up for that difference. And at this point, this is a gamble that I'm willing to take, because if you look again at the option chain, and this is a 2-week option, the one that would allow us to even have a small capital gain, meaning here 20, and as you can see here, the 26 and the 26.5 are completely unavailable, except if you go here into the 3-week option, and it's only for 1 cent. So you would have to go much further beyond in the future, meaning this one, for example, is 4 weeks ahead, in order to get the calls that would allow us to at least break even on price. And yeah, it basically makes no sense. And chances are the stock will never get even close to this point for the coming weeks. And because of that, I decided to take the risk. Let's put here on the 25. It's still above the resistance level of around 24.50, so chances are this will not be reached. And if that, assuming that this is what is going to happen, we keep the shares, we gain more premium, we further collect premiums to lower our overall potential loss. All right. So, and this will keep us moving forward in terms of getting the premiums that we need to make this position relatively worthwhile. At the same time, we sold 5 puts with a 24 strike price. Again, these puts expire this week. Also, one of the reasons why the option chain is shallower than usual is because Friday is a holiday, is July 4th, the Independence Day for the United States. And because of that, this trading week will end on Thursday, so less days towards the end of the week. Options expire 1 day earlier, so less time value, and that means option chains are shallower. So there's no point in us selling a weekly option with 1 cent on 23.5, so we just went for the 24 and hoping that this will not be reached, and we still keep our money available for other puts. If it is, we continue to lower our cost basis, and yeah, that would bring us below this value here towards 25.77, something like that. So it will still go in the direction that we want. Yeah, and so basically this is it. I think for now there are no stop losses added to these positions. We will let these positions expire if needed. This was a set of trades that I was a bit worried about the buying power left. So we have basically almost no room to buy back anything. But so, and also, if the IWM continues to rise, probably we will not have enough money left, buying power left, to sell puts on the 215 or 260 puts. But yeah, we'll see. For the time being, we collected quite a lot of premiums of this for this week. This is in excess of $300 up front, and hopefully IWM will expire. These puts expire worthless, and we will continue to do the trick for the coming days. Yeah. So for the time being, this is all. And feel free to leave your comments in the comment section below. Also, of course, feel free to like the video and subscribe to the channel. And we will reconvene at the end of the week to see how the trades played out. And yeah, I'll see you there.